Well, despite the near-term challenges caused by COVID-19, Cochin Shipyard was able to deliver good performance in the Q4 earnings. In our ideas for profit today, I will discuss whether investors should keep an eye on this one for the long term on the back of strong traction. Well, if you see in revenues led by strong execution of order in hand, the company was actually able to navigate through the crisis gracefully. Thankfully, its operations have resumed and gradually expediting work on the projects as well. Now, it is hopeful of the situation getting better in the current fiscal, as well as some of the measures to mitigate the crisis also yield results. Now, the ship repairing operations have actually suffered during the lockdown, but its large IAC, that's the Indigenous Aircraft Carrier project, continues to witness traction, and that has really helped in the overall performance in Q4. Now, the shipbuilding operation also witnessed close to 8% year-on-year growth in revenue as against the steep 17% decline in the revenues of the ship repair business. Now, the overall impact was quite marginal and the company was still able to post a decent 4% year-on-year growth in revenues in the March quarter, that's the Q4 FY20. Now, in terms of profitability too, the shipbuilding segment definitely helped it posting better margins. In March quarter, EBITDA margins expanded by 600 basis points to say 20%, and the net profit during the March quarter also grew 42% on a year-on-year basis. Now, while the first half of the current fiscal could be definitely slow, some of these execution issues will be sorted out and the second half could recoup the losses of revenue caused by the COVID-19 pandemic. Now, this year the company also expects revenue growth to be flat considering the loss of revenue in the first quarter of the current fiscal. Now, its international ship repair facility is expected to be commissioned by the end of December 2021 and the dry dock will commission by the end of December 2022. Now, the company is currently sitting on an order book of close to 14,100 crore rupees, which is about 5 times its shipbuilding segment's annual revenue. Now, Cochin Shipyard has also corrected in the past also from say 52-week high of 491 rupees to about 209 rupees in March seen this year. Now, while it has covered some of the lost ground, even at the current levels of say 304, it still offers some good value. And based on the FY22 estimated earnings, it currently is trading at 6 times, which is quite attractive when you consider it along with the growth visibility, zero debt, high cash on the books, and also a dividend yield of close to 6%. Now, investors can definitely bet on the favorable risk-reward ratio that the company really offers or the stock offers at this point in time, and also keep the company on its radar for the long term, keep accumulating also on dips is what we have to say about this stock.